Know how to read the bad news, and after the bad news the price action which is coming in a stock. This is Infosys chart. You see, after a bad news, when already Infosys was down from 1900 to somewhere 1300, one bad news comes and there is this big volumes are coming. After the bad news, a big gap down is happening and a big volume is coming. Do you know how to read this and how you can take advantage of this action? One other example you can see of JBM Auto. JBM Auto, when it was trading around 100 to 200, there was no up move, it was a sideways action, and there were this price action, this big green color volume days were coming. If you would have analyzed this, you would have taken entry, you would have start taking entry in such stocks, and you can gain from this. So today we'll learn that how to read these big volume days, and where we can find out that which are the stocks where today the big volume candles are being forming, and how to take advantage of that. When it is forming at a lower level, what is their meaning, and when it is coming at the higher level of any stocks, what is the meaning, when it is considered as a some smart money is taking position, and when it is considered as a somebody is distributing among the retail traders. This all things will covered one by one. So welcome back to our channel Trade with Books, and happy new year to all of you. Hope this year to 2025 will be amazing for you, and your trading career will entirely change. You will find some system so that you will be profitable. Without system, randomly trading is you should avoid, because with that nobody can succeed. So first of all, let us read what is meaning of this Infosys chart, how to read this type of price action. So you see, Infosys was trading around some 1900. You can see Infosys reached up to 1953 in January 22. When it was January 22 and almost March 22, it was trading around 1932, where it is now also. From there, the start falling down. Then suddenly, after so much fall, like almost you can see from here, stock has fallen 27%. A stock like Infosys, which is a market leader, everybody wants to buy at low level, that is already down by 27%. Okay, now some more bad news are coming. Already stock is down 27%, such good stock. So again bad news is coming, and because of that bad news, this gap down is happening on the day of 17th April 23. After a so much fall, a bad news comes, and there this big gap down is happening, big gap down. But after this gap down, what is happening, that is very interesting. You see, price opened somewhere here in 1250, then it went down, means retail players were very afraid that stocks will go to zero, this stock will go to zero. That's why they were selling like anything. And the big money, the smart money, the smart player was accumulating. This was evident with that volume. You see, the such high volume came, and the candle which formed is a very bullish candle. You can see from bottom wick. From here, buyers started accumulating, and finally it closed above the day's open. You can see this green candle. This green candle has been formed like this. This is the wick. So price opened here, price went down first, then it went up, and finally closed here with a big volume. So if you can judge this type of price action that day itself, you can easily make a stop loss here. You can put a stop loss here, and you can start making position next time when you see such price action, that after a already big fall, already 20-30% stock has fallen. Now the bad news is coming, and after the bad news, the day is closing in a bullish candle with a big volume. This is your note. You should write this, because that shows that this bad news was intentionally brought in the market to afraid the retail players, so that the smart money, the big players can make big positions, because they need some very huge quantity of share. Until unless retail is so afraid that he wants to sell at any price, they will not get sufficient stock. So they bring this type of news, this bad news they in the market, that quarterly earnings are not good, expectations are not good, this some company has rejected their order, some tax suit has been filed, some corruption case has happened, Narayan Murthy has told something, something will come. And after so much fall, when this bad news came and it opened gap down, that was the time to buy, that was the best time to buy. Again you see, again price somehow going up, retail player, maybe some of the retail player are trying to make position, but again one bad news comes and this again one gap down happens. You see this, again gap down happens, again same big volume comes, means this shows that big money is making position. So in this region, if somebody is from us, like from our squad, could have made some position, he would have made a healthy profit, because from here now stock is trading at 1950, 1400 levels were there that time. So this type of example you can see in all kind of stocks. One Titan, I will show you one example where I was trading. Then we'll go to JBM Auto case. Then I will show you Oracle Finance one example. Then Zomato also will see. Then I will show you one charting screener where you can find out that from where you can see that today in which stocks this type of volume is coming. Okay, this is our plan, today's plan. So we'll open Titan chart where I was trading one time. Price was around 1900, I remember, and price opened gap down, and then from there it went again some 100 points, but day closed in positive. Then stock was already at very low levels it was trading, so I knew that this is the bottom. So I traded also, so I will show, that's why I am remembering this is that day. This is the day of 1st July 2022. So you see the same thing happened here also. Price was already down. Titan, such kind of stock which everybody want to buy at every level. This price is already down. From here you can see 29%. Stock is fallen 29% already. So all bad news have been accumulated, or accommodated, already accommodated. Now if any bad news is coming, that is to make afraid this retail players, and the big money wants to make some heavy position. And in price action you see the day's price action, what I am telling, this you see the price action. The day opened around here gap down, it opened gap down, it went another some 100 points down, but from here the smart money started accumulating and day closed higher here. So this was showing that first retail players were made to sell their position and smart money started accumulating. So this was the ultimate stop loss for our bottom was the stock. From here stock doubled in less than I think 1.5 years. So this is how this type of price action are very common in falling market, like current scenario when Nifty is falling, correction is happening. So such condition, many good stocks you will find out which are already 20-30% down, their fundamentals are good, but suddenly some bad news will come, they will open gap down, but with a big volume some accumulation will happen. So if you start to analyze these things, you can get at very good levels such good companies. Now we'll see one new company, this is fund JBM Auto, which was trading at very low level, and almost always all smaller companies which are becoming multi-bagger later on have this trend. I have seen that is these big volumes in dry land like Registan, Sahara Island, some big towers will be there like this. You see this JBM Auto chart, if you go from here anywhere you go, this some big red, green candles are there, Burj Khalifas. From where it is coming, this is a flat land, almost flat land. Stock is trading almost between 100 to 200 sideways, sometimes going up, sometimes going down, but these big green candles are coming. Now when I moved this one, this has become very smaller, that earlier we saw na these things, this was become very smaller because that giant big red green candle has come. You see this one, this one. So this is showing that at this price somebody was making position. Now whenever you see such kind of volumes in any chart which is making base, these are the bases, very small candles, nobody is interested in this. Like you see the here price actions, you see nobody is interested, and suddenly some green volumes are coming and stock is again making base and breakout, again making base, breakout, like that it is happening. So you should also start building in position in such stocks, because that may go very high. Like somebody knew something that we don't know. We can't know everything about stock market, every business, but insiders are there, they know something about the business, so they start making position. At you see here, JBM Auto was that time some 178, it is not very far, July to November 21, means 3 years. From 3 years this 200 rupees stock has reached to 2300, means 10 times, like multi bagger in 3 years. But because of this volume you could have caught that okay, this is going to be a big. You see here sideways action, this price has gone up to here, this point 658. When it is falling, this entire fall you see from this level, this entire fall you could have simply make a trend line, and this fall, this triangular pattern had no volume. This region has no volume, means selling is not very big. Some retail players are selling who are satisfied with this much return, they are selling, and big player is accumulating. Here he was accumulating, this is accumulation zone, and accumulation zone can be identified with volume, because volume have been dried up. If you want to see another chart, you can see Tata Motor chart. When it was going up, the same triangular pattern it made and breakout it given, and this was the accumulation zone. Accumulation zone you can identify where volume will be drying up, dried up, like retail player will lose all its interest in that stocks, because retail player wants some dhakka mukki, like some action. It's like stock should go in within 10 days some 50%. But if stock is making such sideways movement, most of the retail players will sell their position and they will go out. This is what big money wants. You see from here 2022 starting to almost I think 1 year, this is almost 23 came here, only volume came in October. This green volume, this green volume came here in October. Before that this volume was almost dried up like Sahara Registan, because all retail players are now gone. They are telling I can't keep this stock 1 year, nothing has happened. Same happened in ITC, you may be remembering, when stock was trading around 200, 2 years it traded around 200, then suddenly in 1 or 2 months I think it went up to 300, then 400, then 500, because retail player wants excitement. Whenever you see drying up price action in any accumulation zone, that is going to be breaking out upside and going very high, because some big money is making position in that. Small funda, very easy funda, you should remember this. Okay, so let's go to here. Then again you see big volumes are coming and stock is going up, stock is going up again, that you see consolidation zone here. This full region was consolidation zone, and here also volume is like, where is the volume, where is the volume here, gone, nothing, no volume is there, dried. So volume, you should start looking at the volume, how to read it. Then again breakout happened and stock went up. Now stock went up to 2300 from here, where 2350, and now it has again sideways movement, it is going in a consolidation phase. Again some green volumes you can see, again it may go up if it breaks somewhere here, that channel. Okay, so it can go like this. So this is the way you should read stocks. Now again one more example will go, that OFSS, Oracle Finance. This also I have traded, so I remember the price action when it was 3500. You see the giant candles on breakout, but before breakout also some volumes were seen. If you highlight this one like this, you see here, you see here no breakout happened, nothing happened, but stock is having, you see, gap down on bad news, a big volume, then again big volume, big volumes are coming and stock is going up. The stock price was 3500 in not very past, it is, this is free version of trading view, this is 9th May 23, means May 23 it was 3500. it went up to 12,000, almost 3.5x. Just with this volume we could have caught it. Next example, Zomato. Zomato, you see, Zomato, when it was making a stage one consolidation, this stage one consolidation, you see the green volumes. From here itself, somebody was making position. This price, 40 price. 40 price itself, when Aswath Damodaran told that 40 is the reasonable price for Zomato, some big players were making position in this region. Okay, so this is how you can read volume. Volume is very easy to read, and whenever you see volume, that stock should immediately come in your watch list. Okay, now I will show you that in top region how you can see the volume. TCS example, when the top, at the top, when heavy volumes are coming, what it shows. So you see that price went to, after this COVID rally, price went high and it reached to somewhere here. TCS prices are reached somewhere 4,000. And here you see all red volumes, red candle, you see volumes are coming, means selling there is more volume than buying. So at top level, when selling candles, selling days, negative days, red days are getting more volume, you should be very careful that now this is the end of the rally, or for some time this stock is going in a sideways or stage for downfall. So you should consider, if you are doing a trading for short term, you can consider selling the stocks, because that is not going to give you very high return in near time. So you can see all red volumes from when the stock went here, the downside, it made a sideways consolidation, and again green volume started coming. You see green volume started coming. Now the green days are more from here onwards. Okay, so this is how you should read the volume. Now where you can find out that, from like today, which are the stocks, you cannot go and search every stock that whether heavy volume has been come. So there is a charting screener you can use, that is called the volume. So I will give you that one, that I will give in the description box. So this is that volume shocker. So when you click this one page will come, and here today these 7 stocks are there which are showing high volume. So suppose you ITI is there, so ITI chart, if you open here, we will open that ITI limited chart, and you can see that heavy volumes are coming. So suppose you saw now this stock, that here drying up action was there in this full consolidation zone. You can see some big green volumes are available already. Some big green candles are there. When it was going up, this region, it was going up, volumes were coming, then again it has become sideways. There is full drying up regions are there, only green volumes, and now again in breakout green volumes are there. So this stock has some action, even though market is falling, the stock is going up. So this is good price action. Now you have to check fundamental of this stock, whether earnings are increasing, whether this company has debt, how much debt it has, what is the size of company, total market cap, what is ROE, what is ROC, this all parameter you have to see. So you will get some 3 to 5 very good stocks where you can build your position. Don't build in some 70-80 stocks, that will not give you anything. You have to build your position in 3 to 5 stocks. Then you will fail in some 1 or 2 stocks or 3 stocks. That money you have to take out, and you have to put that money in the stocks which are going up. This is called pyramiding. Suppose you have bought 4 stocks and one stock is going up, and other stocks are giving you stop loss. So that money, if you put here, whenever this is giving breakout, this will give you a very good return. This is how you should do pyramiding. And averaging is ulta. Averaging, when you are doing buying the stock which is falling down, that is called averaging. You should avoid that type of things. So this was the whole concept of volume. Now with that volume, you can add what is the delivery percentages in this. So delivery percentage you can see in Stockage app is there. Then if NSE site, if you go daily, you will find out that what is the delivery percent. Suppose this is very big volumes are coming, but from this volume, how much percentage of stocks have been taken in delivery? Because delivery, you cannot take the sell position. If you want to take a position in delivery with sell condition, then future you can take option future and option wala future. But in normal cash market, you cannot take. So you can see in ITI what is the delivery percentage. For that, I am using Stockage app. So you can also use Stockage. This is not free anyway, but for the time being, I'll show you if you can afford. This is 1700 something for per year. So suppose I have now stock ITI Limited. So I will go to ITI Limited. Now all things are here. So I can see some basic things like what is market cap, 43,000 crore. This is telecom company, mid cap company. Then what I want to see, that delivery percentage. So here I will see that delivery percentage is very small. Like from the total volume, only 9% have been taken in delivery. 7%, 5%. Here I want to see some heavy percentage like 70, 80%, because that will show me that these stocks are taken in delivery. Suppose I will show you good example of any other stock, that is Asian Paint. So Asian Paint I will show you. Asian Paints. Asian Paint, if I go to delivery, here you can see that 55, 53, 52, 51 percentages are there. Here 72% is there. Means at this level somebody has taken in huge delivery. Okay, so here some delivery has been seen at these levels. Okay, so this shows me some conviction that this stock has been taken in delivery in huge quantity. Okay, then fundamentals you can see. Fundamentals means what is the your EPS growth. So here at the last adjusted EPS is there. So means EPS growth is negative. That's why stock is falling. Asian Paint. When this will be positive, again stock will become rocket. That easy example, if you want to see, I will show you that Zomato example. So we'll open the Zomato chart. I will show you one very good thing about Zomato fundamental. This is Zomato. When the Zomato started rising from here, somewhere June, July, okay, this is clear. June, July, this has given breakout at around 74 and it has gone like a rocket. But why it has given in June, July 23 this breakout? That if you want to see, you search zomatoscreener.com. That is fundamental we want to see. Screener.in. And now you open this and now you come to June, July 23 EPS. This is June, July, June quarter result. So if you see that June quarter result, here I will keep. So June, this is June quarter result. The EPS comes as 0. EPS came 0. Earlier EPS was negative. Okay. From negative it turned around to 0. Then it becomes increasing. It become positive and it started increasing. So the stock become rocket. Okay. So always you should see the fundamentals also. Fundamentals also works very well. Now people are telling when this Tata Motor and Ola Electric will go. So simple thing is you search that Ola Electric and go to that EPS thing. EPS you will see that EPS is in negative. You see negative. You wait for it to become positive. This EPS let it come to positive, then stock will become stable, and when it will start increasing, the stock will also fly. So you should always see fundamental also along with the technicals. Okay, now Tata Motor question. Tata Motor today I think 3% it rallied and everybody was like Tata Motor now will go to 1200. And in news, in influencers, all are like you buy Tata Motor. But if you see Tata Motor, this is a cyclical stock. For a cyclical stock, when P ratio is less, you should sell it. When P ratio is 100, you should buy it, like very high. That I will show you here itself. No issue. That you see. First thing is EPS. You see EPS is still falling. It's not increased. 52, 16, 9 EPS. Now it is falling. So why stock will go up? It is falling. When this will start increasing, your stock will also start increasing. Now you see here P ratio thing, what I was telling, that P ratio chart I will show you. This is P ratio. When the P was 111, 111, the stock in June 23, P ratio was 111, and price in June 23 was 500. So P ratio was 100, price was 500. Okay. Now P ratio has come down to around, here you see 9 or 10, and the stock is falling because P divided by earnings. So when earnings are at very high, P ratio will be very low. So from that high earnings, now sales are down for cars, so earnings will start decreasing, that E will start coming down, so P ratio will again increase. This is a cyclic stock. In cycle it runs. So hope you like this video. We have covered that what is important of volume, fundamentals, why you should see, how you can see technicals, fundamentals combinedly, how you can keep in your watch list some good multi-bagger stocks. The screener link I will share in the comment section and also in description section. You can tell me what else you want, which topic you want to cover, fundamental, technical, intraday, option, future. I will make video accordingly. And if you have not subscribed the channel, consider subscribing and share it with your friends who wants to learn stock market in simple language and the basic things and the books knowledge that I will keep on sharing, and hope this year will change your trading career. Trading, if you are doing randomly without any plan, without any system, chances of your success are very small. If you have some system, in future and option also you can succeed, but future and option buying you should avoid, because buying is without a system. Option buying is like giving your capital in one day. You may, with your good luck, you may get success for 2 3 years, but that will be like 1 month where your all capital can go. If you don't have any system, you don't have control on your risk. So I always suggest people that if you want to do option, you should start making some strategies, some system. Like I am doing option trading only, option, I am doing option selling non-directional, but I have a system which is giving me more than 40% per year. So I am happy with that. I am putting all my money in that. But if you don't have any system, and for system means you should start working out with one lot, not like full your amount you put and you should try. That will blow up your capital. With one lot you try, if you get success and if that risk reward matches your emotions, your trading style. Suppose you are you cannot take that much tension, and you have now started that intraday option buying, like scalping video. Somebody, you see that he is doing some 14,000 trades in 1 month, and you also started without thinking that that is not suiting your emotions. So that will destroy you. So I have seen people who have taken lot of money in borrowing and they have bankrupt with the future and option. So if you don't want to learn, you can simply put your money in FDs and mutual fund. That will also give you a good return. There is no guarantee that you put in stocks and your money will grow only. So if you don't want to take risk, the best is to put in ETFs, mutual funds and FD. There are many ETFs. Suppose you find out that now IT sector is the leader of the stock market for some time. With that relative strength model, adaptive relative strength model, you find out that IT sector is sideways when the Nifty is falling. So this itself shows that IT sector is having strength, and this will be the market leader for the next rally. But you don't know that which are the stocks from IT sector that you should buy. So you go and buy IT sector mutual fund. What is IT sector mutual funds? ITBs. Simply you can buy ITBs. This will be written in your broker. Suppose you are using Zerodha or any other broker, you search for this ITBs. This is IT sector ETF. You can put money in this. If entire IT sector will increase, this will also go up. And when market has fallen, this is the best time to invest in ETFs, because you will get a very good price if you keep on buying at every level. Every 10% fall, I will buy some Bs. I will buy Nifty Bs, ITBs. That is my plan. So that will give me a very good return, more than FD. So this is way you can plan. Okay, we'll see you in next video. This video has become long, but no worries. All the best.